Hello, guys. Welcome back to All Stars Aligned Trading. I want to start by apologizing to you guys for a couple of reasons. Number one is that I didn't remain transparent with you guys that have been following the channel and have viewed and observed my progress. I was dealing with a couple of losses and I wasn't showing it, I wasn't being transparent about it, and that is not what trading is all about. Trading is supposed to, as a trading content creator that I am, I'm supposed to show you guys the good times and also show you guys the bad times so that you would know your realistic expectations to what trading is all about. So speaking of realistic expectation, right now I'm down $1,400 on my campus fund account, which is quite painful, but I take total responsibility for it because everything that led up to this loss would have been prevented if I had the right psychology or if I had managed everything well. But that is still, it's in the past, but it's the truth. I didn't manage my trades properly. I didn't manage myself properly, and I spiraled down and had a series of losing streak, and I'm at this point now. So I'm coming to just show you guys the final stage of this account because right now I have $600 left. So if I should split that into 10 trades, that is going to be $60 per trade, or call it $65 per trade, and before this account is blown. So welcome to another week of All Stars Aligned Trading Weekly Outlook. We'll be looking at a few things that are capturing my eye right now. And in this period where I have not posted in a while, I've been able to learn a lot of things from the mentors at Online Trading Campus. Shout out to Brent Skopinski and his brother and the other mentors in Online Trading Campus. I've been able to come across new knowledge and new things I didn't know about. And that is the thing with trading. It's time that refines you and make you a much better trader. Time refines you. Time in the market, time spent in the market, you see things and you recognize patterns and they stick with you. So that's why trading is just the best business we can actually get ourselves involved in. So right now I'm in a trade that, if you see the P&L, you would notice that there's a trade running right now that is not looking so good, and that is a trade I was running over the week, which is on Nikkei. So I took a buy entry on Nikkei, and it was going well until it stopped going well. And so that's basically just on Nikkei, because beginning of last week we had a move to the upside on this daily time frame, this move, this engulfing impulsive candle, but then it was faded for the rest of the week, and the market is still holding on to this trend line. So you see that this trend line has been touched multiple times and it has respected. So the market is still holding on to this trend line, and I know when the market opens today I would likely get stopped out from this trade, which is a $65 risk. Like I said, I have 10 attempts at this account. And before I came to Nikkei, what was on the screen was a trade on silver. And if you have been watching Brent's series, you would know that this is a trade idea that Brent has already set from this level. But me, I made a refinement because the lowest, my lowest lot size, if I should take this trade, will still eventually be a risk of $240, which goes against the overall risk I plan on taking on this account. But then this is a high quality setup by Brent Skopinski, and I rather take the trade and be wrong than miss out on the trade and feel bad for the rest of the week. I might be, if I wanted to take the trade from this level here, that means I'll be risking $300, and I don't think that is smart, because that is another extra $100 which I can split into two for two different attempts. So I wouldn't be making that adjustment. I'll just stick to what is looking like here. And if we should get filled, fine. If the market should move without us, then it will be painful, but then there's absolutely nothing I could do about it at this point. So the P&L remains the same, 43,637. So this 637 is basically what I'm allowed to trade with. So just call it that my total buying power right now is just $637. And would see how it goes and see if we can come out from drawdown. If I should come out from drawdown with such an account and still make a payout, that would be massive. And that's part of the reason why I want to document this remaining process transparently with you guys so that you would see everything that happens. 10 attempts, 10 trades, or okay, because if I should consider that silver trade, that is taking about 2.5 of the 10 bullets that I have on this last stage of this account. So call it 8 trades that I'll be able to take on this account aside from silver, and I'll be documenting all of them and would see the result of me being totally process oriented and taking the trades that present itself and not adjusting or stopping myself out manually, because that was part of the reason that I spiraled down from that was part of the things that led to me spiraling down from February to this very point. Me closing trades manually out of fear, and those trades going very, very well, and me sitting on my hand painfully. And speaking of painfully or painful events that happened still in this year, I had 200k in fund, 200k in challenges. So that was 100k, and then the extra account that came with it. So that was 200k altogether, and I lost all of them. So still a learning curve for me, because I've realized that there's still a lot of learning for me to do. I haven't really gotten to the level of perfection, and that is the thing. We will never get perfect in this market. We keep learning every year. So in the end, all this before we start the video is just word of encouragement to my fellow traders out there. If this year has been rough for you, just know that you're not alone. It's been an exceptional year, exceptionally bad, just crazy price action, and there are years like that. And still try and reflect, and you might find that you are part of the problem and part of the reason why your trade is not working out. It's very possible that you're part of the problem and you still have work to do on your own end. I was with a friend recently, and he was talking about how trading will reveal who you are to yourself, because if you reveal your indecision, your indiscipline, a lot of things about you will be revealed on the charts. That's part of the reason why trading is one of the best things you can get involved in, because in the end, in the other side of the pain and everything you are dealing with, we find out that responsibility falls on you. It's all up to you. Your wins, your loss, everything about the market is really up to you. Nobody can take that responsibility from you. And once you can learn to be responsible for your actions in trading, it boils down and it shows up in other parts of your life. So this has been a lot of words that I've said. Now let's get into the chart and see what I have for this new week aside the trade on silver, which was the trade idea by Brent Skupinski. So starting things off, I am actually looking at Canadian dollar. Why? Because if you should observe COT, this is on the monthly time frame. We'll go back to the weekly time frame. So if you should observe commitment of traders report from the commercials, you would observe that we are coming from a very bearish behavior. You can see that the institutions were quite bearish for a period of time, and all of a sudden they are very bullish. So we are coming from this level here where we see that institutions we are extremely bearish, and this was as of March of this year. But right now we can see the trend. Institutions have become bullish, and they haven't been this bullish since 2025, November 2025, which is even they are more bullish than they were as of November 2025, and almost as bullish as they were in a 2-year extreme, which is July 2024. So that is part of the reason why I'm looking at the Canadian dollar. And secondly, one of the extra reasons why I'm looking at Canadian dollar is because we are also coming from this point here, which is a weekly time frame drop base rally level. I didn't enter the trade because I, even from this recent time I've gone offline, I've learned that you can refine your trades from the weekly time frame and go down to a lower time frame and increase your risk to reward proposition better than waiting for monthly income trades where you have to wait for weeks for the same trade to play out and eventually end up with a less risk to reward. So I'm learning to refine my trades to the smaller time frame so that I can be able to capitalize on the move that usually happens alongside commercials. Whenever the banks or the institutions are in an extreme and the trend is about to change, you can capitalize on that trend change with more risk to reward potential for yourself. So that's why I waited for a reaction to this level, this weekly drop base rally level here. And we had this reaction in the last, call it 5 weeks. So 1, 2, 3, 4, 5. In the last 5 weeks, we had this reaction to the upside. So I refined, and if you should check the weekly time frame shortly before we go back to the daily time frame, you can see that this is a drop based rally level, not a continuous rally, but just slight rally in price here. So going down to the daily time frame to enlarge that level and see the potential for a trade here, you can see that this is a drop, this is a drop, this is a lot of base, but if you want to refine it to get this, we would see is a rally base rally level, and I will just be covering for the entire zone. So that's what I'll be doing here, covering for this entire zone at this point, and this is it. So this is a, if I wanted to take just the rally base rally level, this is what it's going to look like, this green box, but I'm covering for the entire zone so that my stop loss will also be below this cluster here. So that is going to be the rally base rally level on the daily time frame. And if you should check what it looks like on the USD card, this is what it's looking like on USD card, because remember our analysis starts on the futures, which is the underlying asset, which is the most important chart to observe as a swing trader or even as a trader generally. But this is where the institutions and the banks make their own analysis and place their orders on the futures contracts. So this is on the Canadian futures, and that's part of the reason why I will be taking this trade next week. I've already set a pending order on this. So USD card, USD Canadian dollar. So I already have a pending order on this, and this is what it's looking like on the weekly time frame. But if I should refine down to the daily time frame, we would see it's the same level. I have the first trade very close to entering last week, but it didn't get filled. The first trade is of this wider version level of this drop base drop. So it's from the wider version, and then if the market should move up more to trigger this preferred level here, that would also be lovely. And remember, my stop loss is also above this pivot point, so in case the market still wants to retrace more, it can, and if it falls through, that would be lovely, and that would be a quick 1 to 3 weeks to reward trade, especially if the trend is about to change in line with what the commercials are doing. And that's just the first trade idea that I have. I was going to look at euro, but then the euro is actually far from any valid level that I would want to take a trade from. And I'm not paying attention to it yet, because on the other hand, the XY looks like it's coming close to this weekly time frame level here, and if you should measure it using the measuring tools to see how many percent away from that entry level, you can see that we are about 2% from getting to that level of interest for me. But if I should flip it to the other side and see how far we are from getting to the similar level, which is down here, we will see that it's going to be more than 2% for us to get to that place. So to get, we would have to move twice the range would have moved on DXY just to get filled on euro, and that's part of the reason why I'm not paying attention to euro yet. On GBP USD, which is British pound, I was observing this level just like the Canadian dollar, but if I'm taking a trade on the Canadian dollar, then it's basically the same thing at GBP. And on GBP, this is the similar level to what we have on the euro. Rather, I'm ignoring GBP for now. My workouts, and I might be left out, but still, it's just what trading is. We can't get all of them, and the ones we eventually get, we should just make sure we manage them as much as we can. GBPUS is actually looking good on daily time frame because this is a drop based rally level, and it was a sustained rally that went a long way. So this is actually a valid level if I want to consider it next week. But I don't like the remaining fundamentals, especially with the fact that we are seeing an adjustment from in behavior, an adjustment in behavior from the commercials. Even though I know we are coming from this level here, if we should also even check the monthly time frame, we see that we are in a very high level of, I mean, we are in a very high level here. You can see that last time we were we found the commercials this bullish was in 2019. That's a longest time, very long time ago. So we are coming from that level here. That's part of the reason why I might be looking to be bullish the British pound, because even with this recent selling off from the commercials, we are still coming from this very high level. So British pound might be something I consider this new week, but we have to look at COT, because observe, last time we were here was July 2019. So that is a serious extreme, and I feel like the retailers are also on the opposite side of things. Let me confirm that. So yeah, you can also see that the retailers are also on divergence. They are on the opposite side of things. And last time they were also this bearish was also in 2019. So British pound is actually looking like something I should consider, but then I would in this video would know if we eventually consider taking a trade on the British pound. But that's actually the two trades so far: Canadian dollar and the British pound. And finally, what I also want to add to the mix of things is actually the Swiss franc. Why am I looking at the Swiss franc? Because right now we are also in a very pivotal moment in the market. How on the monthly time frame we can see the COT and see that we are coming to this point in orders that market the institutions haven't really been this bullish for a while. And the last time they were this bullish on the Swiss franc here and also here, which I think I should do the same thing on the British pound. Last time we were here, we see that the market moved to the upside here. You see movement to the upside, also here movement to the upside. And remember, when you see extreme behaviors in the commercial reading, just know that the trend is about to change, and that's why you pay attention to extreme readings on the commercials. And aside from that, if you should check the monthly time frame on the Swiss franc, we can notice this level here that just triggered, or I think tapped in, okay, yet to tap into this level, which is a rally based rally level, which is quite high, right? Quite high, but still not extremely high. And again, remember the trend, we are in an uptrend on the monthly time frame. So this is a trade that it's in line with the trend, in line with the commercial present reading of things. If you should refresh that memory, you see that we are still coming off this monthly time frame extreme bullish level. So before I would change my bias to a bearish reading would be, except we come back to this level below, which was another recent extreme. And you see, this is the only time if the commercial should come back from this place. Let me highlight that so that it's visible. The only time I would reconsider this trade on the Swiss franc is if we should see that the commercial orders are still moving more and more to this level below here. That's when I would consider that. But for now, that we are still in this range, in the higher point of this range, I still remain bullish on the Swiss franc. So if this is the monthly time frame level, we would want to refine to see how much how much potential profit we can actually capitalize from this particular monthly level, especially if you see that the daily time frame, you can see this move to the downside has been quite aggressive, and we might be coming to an end of that bend. So this is the daily time frame level inside this weekly time frame level. I want to change the color so that I'll be able to run a better analysis on this. So this is the monthly time frame level. On the daily time frame, the only valid level I can observe is this drop, or call it a rally base. This is 1 2 3 4 5 candle base. This is the only valid level I can pay attention to right now on the daily time frame. But then doesn't con it doesn't consider these remaining levels here, and I would not want to cover this entire range because it reduces my profit potential on this particular trade. So this is the only value level, and you, funny enough, he had a gap to it. The volume coming from this level left this gap here that eventually got filled before we had this continuation, and the market hasn't really come back to this level except for this particular point in time, and that is part of the reason why I would be considering this. But then what crowns up all these trades, because let me bring them all close to each other. So what we've looked at is the Canadian dollar, the British pound, and also the Swiss franc. So the Swiss franc, also, those are the three pairs we have considered so far, and this is what the levels are looking like. This is the daily time frame level on the Swiss franc. On the British pound, we also have a daily time frame level which is still below here, but British pound is not necessarily a top level for me. But on the Canadian dollar, this is also something I'm considering once this new week starts. So now that we're in the daily time frame, I might be ignoring a couple of other fundamental tools we make use of. That you might notice I'm ignoring a lot of other fundamental tools, but I would definitely be making use of seasonality, because if I should look at seasonality, look at a 30 days for forecast, right? You see that seasonality is not really supporting this Canadian dollar trade idea yet. It's quite slow. It's not supporting it yet. We are not yet in that, guys, on the 5 year average. We are not yet in that bullish window. If I should go to the 10-year average and see if no time say, oh, but on the 10-year average, we are in a relatively strong window where we can actually pay attention to this, but not. Let's check the 15-year average to crown up most of it. So 15-year average, we have come to this end of this bend where we can expect a move to the upside from August 7th, which is still few weeks from now. I don't really like what seasonality is looking like, but sometimes you might ignore seasonality, especially if it's looking like other things are going to work out, especially with the COT extreme. If I should check the Swiss franc 10-year average, nothing on seasonality is looking good. Checking the 5-year average finally. Then I'll check on the British pounds to see if it changes anything for me. Still not looking good on the British pound. And remember, we are looking for high quality setups. British pound down, seasonality 5-year average not looking good. Let me check the 10-year average. 10-year average also not looking good until August 17th, which is going against what this particular week that I'm considering taking this trade from. So British pound not looking good. Swiss franc not looking good on seasonality. Canadian dollar also not looking good on seasonality. The recent trade I took on the New Zealand dollar, even though the seasonality wasn't looking good from here, I still took the trade from here, and you see that it was a good trade overall. And that was on New Zealand dollar, same trade Brent called. And you see the 15-year average of seasonality wasn't looking good. 10-year average, same story, wasn't looking encouraging at all, but we still took the trade. Why? Because COT was what was important for us. It was only on the 5 year average where we saw this slight move to the upside, but it's not very compelling for us to have considered this trade just off seasonality. So, with that said, out of the three, Swiss franc looks the best right now for me from this level. I actually like this level a lot. So I'll be taking this trade and I'll be set. Once I'm setting it, once the market opens, I'll also be informing you guys on this particular trade. So Swiss franc, British pound, and the Canadian dollar. The Canadian dollar already has a set order already. But once I have a set order on the British pound, on the Canadian, and on the Swiss franc also. So let's just go through them right now. So GBP USD, GB USD, GBP USD first, and then we would look at Canadian dollar. So on GBP USD, this is what the level might be looking like when we get to that point. So this is it. So using the Fibonacci tool that has already been set to put into consideration our stop loss and our take profit level. So this is what GBP is going to be looking like when we get to that point. Then USD CHF, finally the final trade idea for this new week we are entering. USD CHF level. On the CFD, the level looks like it has already been triggered already. Well, if I should look at on the CFD, this level here was where we were considering on the futures, but it has already been triggered. The next value level is this one up here, which I'm not really a fan of right now. Let me check the weekly time frame. On the weekly time frame, is basically the same story. It's not looking so good for me. Okay, it's only on the weekly time frame that I see that this is a fresh level. This particular preferred version hasn't yet came close, but it didn't really trigger it yet. So you still have a distance to cover to get to this particular point where I might be interested on the Swiss franc, but that's it for now. Next valid level is this one, which is still a distance away. This weekly base drop level, still a distance. But all that to say, I am back, just like Ronaldo said. But that was a self-sabotaging statement because he eventually didn't get to the finals. But me, my case is different because I'm a Messi fan. So if I say I'm back, it can still end up good for me. So all that to say, I feel bad for Ronaldo fans. I'm just throwing slight banter, but then we'll see how it goes. We'll see how it goes. New week, I'm back with new content and just observe, learn trading, and I'll be back with another 100k challenge pretty soon. That will be September, fingers crossed. But then I would document everything on that particular challenge with you guys, because why it's going to be helpful is I'm trying something new. If you check the previous video I did, the previous animated video, you might have an idea of what I'm planning on doing this time around. And if I do it and if it works out, it's going to be something that will help all of us as a community, because we would have cracked something that we can repeat next year and find success in passing two-phase accounts, especially prop firm space. So with that said, this is All Stars Aligned Trading. Lovely to be back. Lovely that I got a lot of messages from you guys checking on and wanting to see more content from me. So I'm back, guys. We'll see another content middle of this week to know how our trade ideas are playing out. And don't forget, we also have this trade idea on AUD by Brent Skupinski. I also have a pending order set here. I might be changing this to make sure it's down to $65 exactly, but there's no real difference. I'll just leave it as it is. So AUD we also have a short idea on that coming pretty soon, and on all of them we'll see how all of them goes. But this has been fun. We've spent some time already on this weekly outlook. I'll be seeing you guys on the next one. Ciao, take care, See you on the next video.